I want to talk about this because I haven't seen literally anybody else talk about this. Beretta, the gun manufacturer, has taken a 9% stake in Ruger stock. This is very interesting for a whole host of reasons that we'll get into. First of all, let's talk about the buy. Originally, Beretta came in with a 7.735% stake in Ruger, ticker symbol RGR. And they basically said, listen, we just want to engage in discussions with a member of Ruger's management and Ruger's board of directors regarding Ruger's business, industry developments, and potential areas of operational and strategic collaborations. Sounds great. Also, Beretta made it very clear that they do not have a present intention of seeking control of Ruger. So they don't want to buy the whole company. They just want to come in. They say, hey, we think that there are some operational improvements that you can make, and we think that we can add value to your business. This is very commonly called activist investing. Beretta has decided that the best use of their capital at this moment is to go out and buy what effectively amounts to at least a single board seat in Sturm Ruger's company. In response to this, Sturm Ruger said, hey, we're adopting a shareholder rights plan. For those of you who may not know what a shareholder rights plan is, it's often referred to as a poison pill, where basically Ruger is saying, we do not necessarily want your cooperation. They put out a statement, they said, yeah, we'll talk to Beretta, whatever, but for the next year, we're going to say, if any singular shareholder accumulates more than 10% of our stock, we have the right to sell a whole basket of new shares at a 50% discount to existing shareholders. If Beretta comes out and says, hey, we actually think that we want to buy the whole company, Ruger's basically going to say, well, we're going to dilute your ownership in our company so much so that you would have to spend an exorbitant amount of money in order to actually acquire our business. Sturm Ruger is trading at $37.53. If this plan were to get enacted, they would basically be able to sell a few million more shares to existing shareholders at around $18 per share. It would dilute Beretta's investment to about half, right? Importantly, this is one of the most important concepts in investing. You see a lot of companies, what they do is they go public and they just start issuing shares, tons and tons of shares, in order to raise capital for their business. So this is a very common thing. For companies to just issue shares. It is not so common for them to adopt this shareholder rights plan. So here we have this sort of dynamic where Ruger is saying, yeah, Beretta, you can come in, we'll talk to you, but we're going to keep you at arm's length because we don't want you to get too much power in our business. And so Beretta responded by increasing their stake from 7.7% to 9.95%. So they are really pushing the envelope on this. Beretta is basically saying, okay, we're going to take it to the absolute limit of what we're allowed to do before you guys annihilate your company. Beretta Holdings has increased. They bought 1 million more shares and they have become its largest shareholder. A lot of this has played out largely through private exchanges between the two companies, right? So Beretta sort of has this public stake where they're saying, hey, we want to make changes at the company, but they're not exactly coming out and saying, these are the changes we want to make. They're more so just saying, hey, we're going to take a stake in your company and we're going to, try and work with management privately in order to make the changes that we want to see at the company. Kind of an interesting way of going about it. This is sort of a tale of two companies. Ruger is a company in decline and Beretta is a company on the incline. Is the easiest way to put it. Ruger has seen its price absolutely collapse over the last couple of years, down 50%. They were originally trading at $72. They're now down to $37.50. So like I said, this is a tale of two companies. What we see is Beretta is not a publicly traded company, but they do disclose their revenue. And we have this incredibly impressive chart provided by quarter. You sort of see the growth of Beretta over the last couple of decades. Revenue has steadily increased over the years, and especially we see a large jump when Beretta went out and bought Amotech. This added something like $600 million in revenue to the business. But as you can see, the business, it was growing before then. It just got kind of a large jump. What we see here is a very different chart from Sturm and Ruger. This is revenue over the last 10 years, and we see, revenue sort of decline quite a bit running into COVID. There was a big boom for gun purchases during COVID, and so Ruger saw a massive increase in sales over that time, where sales literally almost doubled in 2 years. But ever since then, see this sort of slow decline. And so at Ruger, we see sort of a systemic problem here. Sales are terminally in decline, but every couple of years, we sort of get, saved. It sort of makes sense for Beretta to come in and say, hey, you guys sort of have terminally declining sales. Why don't we work together and see what we can do about reversing this decline? And one thing I do want to point out is that Beretta hasn't just gotten lucky, right? They are effectively running their business. So we have this sort of really interesting report from Forbes where they talk about some of the operational efficiencies of Beretta, because remember, Beretta is a very black box company. The ammo tech deal, which of course added $600 million to Beretta's annual sales, helping it to overtake Sig Sauer and Smith & Wesson. Beretta, now the world's largest firearms company with $1.7 billion in revenue in 2024. Before the acquisition, civilian sales accounted for 86% of the company's revenue, making it dependent on the whims of hunters and gun enthusiasts, particularly in the United States, the world's largest firearm market. Now, defense and law enforcement account for 34% of Beretta Holdings revenues, up from just 14% 4 years ago. And so what we see here is effective business. Beretta noticed that, hey, 86% of our business is selling to individuals, specifically most of those individuals being in the United States. And so they were like, okay, we're going to go out and we're going to diversify our business. And now an increasing portion of their revenue is defense and law enforcement, going from 14% to 34%. Civilian sales went from 86% down to 64%. They've been able to effectively diversify their revenue streams. There's sort of a term for what Beretta is doing, and that's called a serial acquirer. And so companies that do this are typically quite valuable companies. Beretta has a very long history of making incredibly good acquisitions. Thanks to this push, none of Beretta's subsidies account for more than 25% of the group's revenues. This is what I'm saying. Sturm Ruger is seeing terminal decline because they are unable to effectively run their business. Meanwhile, Beretta's market share is increasing and they're diversifying their revenue streams. And so at this point, I think it's pretty safe to say that Beretta is probably the better company here. And so it's somewhat strange, at least to me, that Sturm Ruger would be like, no, actually, we don't think that. We want to sort of keep these guys at arm's length. And so where we go from here is quite interesting, because Beretta is not backing off and neither is Sturm Ruger. What Beretta is gearing up for is what's called a proxy fight. Beretta is going to seek to use its influence that it has, being the largest shareholder of Sturm Ruger, to attempt to get board seats at the company, very likely. Beretta is currently collaborating with advisors to nominate board candidates ahead of Ruger's annual meeting. Because Beretta has come out and bought a substantial piece of Sturm Ruger's business, they're going to want to install their own advisors onto the board of directors at Sturm Ruger. If they can win those board seats, then it's likely that in the future, Sturm Ruger will be more likely to collaborate with Beretta in terms of what they want to see happen at the company. And one thing that I've learned over the last couple of years, watching a lot of board proxy fights that have gone almost exactly the same way, specifically, let's say Disney, when companies come in and they do this, probably best to sort of stay away from the stock for the time being, at least until after the proxy fight is over. Sturm Ruger is going to have an annual meeting where all of the board seats are going to come up for election, at which point Beretta is going to have its advisors and they're going to urge the existing shareholders of Sturm Ruger to vote in favor of their picks to sit on the board of Sturm Ruger. But in the end, one of two things happens, obviously. Either Sturm Ruger gets to retain their board, at which case I think it's quite likely that Beretta is probably going to give up. However, if Beretta does win and they do get board seats, then it is very likely that Sturm Ruger will be more open to collaborating with Beretta in the future. I don't like to hold stocks going into proxy fights. It's just not good. However, I do think it's going to be incredibly interesting to see where Sturm Ruger goes from here, because right now the company is in sort of a rough spot, and it'll be interesting to see if Beretta actually wins those board seats or not. Personally, I side with the company that's been doing it for 500 years and has demonstrated an incredible ability to not only grow their business by acquisition, but also just organically. But only time will tell, and we will see if Beretta manages to actually make substantial changes at Sturm Ruger. If Beretta does win those board seats, I would consider investing in Sturm Ruger, because I think Beretta probably has the best interest of the company in mind. And with that, I hope you enjoyed the video. Have a great day.